Welcome back to the channel, Mike the Investor. Hope you all are having a great day. Today, I will be discussing what is a Dividend Aristocrat and what is a Dividend King. But before we do that, if you're a new viewer to the channel and you like dividend information, dividend stocks, go ahead and hit that subscribe button, hit the bell icon, and you won't miss another video when I put out new content twice a week. What is a Dividend Aristocrat? By definition, to be a Dividend Aristocrat, a company must be a member of the S&P 500 index and have a minimum of one dividend increase annually for at least 25 consecutive years. Wow. And this is one reason why I like Dividend Aristocrats in my portfolio. The first list of Dividend Aristocrats was published in 1989 with 26 companies on that list. The list peaked in 2001 with 64 companies qualifying as a Dividend Aristocrat. Now down below I have a couple examples of a few Dividend Aristocrats that are known: AT&T, ExxonMobil, Pepsi, and Colgate is actually a Dividend King as well, which we will be discussing a little bit later in this video. Now this graph here will show you just the breakdown of each sector and the percentage where you will find most of your Dividend Aristocrats. The top three sectors will be consumer staples, industrials, and financials. Those are the top three sectors where most of the Dividend Aristocrat companies you will find if you are looking to add some of those to your portfolio. Now, if you don't want to invest into single companies, you also have the ability to invest in a basket of Dividend Aristocrats. You have the SDY ETF, SPDR, S&P Dividend ETF, and then you have PowerShares S&P 500 Dividend Aristocrat ETF, NOBL, which is one of the popular ETFs at this time. They both track the performance of the S&P 500 Dividend Aristocrat Index, so these will be two great ETFs to add to your portfolio to give you a little bit diversity in each sector. Now we move over to what is a Dividend King. Dividend Kings are S&P 500 companies that must have a market capitalization of more than $3 billion and a record of raising annual dividend payout amounts for at least 50 consecutive years. So it has the same criteria of a Dividend Aristocrat, but the only difference is it's grown its dividend for 50 consecutive years plus and growing. Now I do have some Dividend Kings in my portfolio as well that I will be discussing in a later video. I also have a couple other Dividend King examples such as Lowe's and 3M, which moves over to my overview of the Dividend Aristocrats and Dividend Kings. Now, as we discussed previously, a Dividend Aristocrat has 25 years of dividend increases plus. A Dividend King has 50 years consecutive dividend increases. Now, we know a Dividend Aristocrat is a $3 billion minimum market cap. We also know they have grown their dividend for 25 years consecutively and growing. And there's also a current list of only 57 stocks of the Dividend Aristocrats out of all the stocks in the stock market. And now we know a Dividend King also has to be a minimum $3 billion market cap or above, and they have grown their dividend for 50 years consecutively or growing. And there are only 26 stocks that are qualifying to be a Dividend King in the stock market today. So as Warren Buffett will say, there are only so many great companies in the stock market, and you don't need that many to get rich. My word of caution about Dividend Aristocrats and Dividend Kings: companies can always stop paying their dividends, but for these elite companies, it is very less likely. You just always want to keep that in the back of your mind and do your due diligence when investing in any type of company in the stock market. So if this video was helpful to you, you got a little bit more info on what is a Dividend Aristocrat and what is a Dividend King, let me know down in the comment section. Also hit that like button for me as well. That way I know to continue to keep making content like this for you all. Let me know what Dividend Aristocrat or Dividend King that you own in your portfolio. Don't forget to invest in yourself, whether it's investing in your financial freedom, reading a book, building relationships, or even enhancing skills that you already have. This is Mike the Investor. I will see you guys back next time.